All right, hope everyone's doing well. So this video is mainly going to be a sort of weekend update post market of Friday for the dollar yen, which was yesterday. Today's date is I don't even know what today's date is. That's a good question. It's July the 22nd. So let's get started. So anyways, interesting things going on in the dollar yen. First and foremost, yesterday in the pre-market, I talked about how we were getting a 50% pullback. Sorry about that. I had to pause the video. So let me just kind of start over with that. We were at a 50% pullback. Now the issue is, if you look at a weekly chart, that's what this 50% pullback looks like. So, as I said last week, and if I didn't, I apologize. What's going on is we have a double top, and this is pretty good follow through from the double top. So you really gotta, they never look good. They never look like they're going to succeed, but you always have to question for the bears. This is a bear channel and two-legged pullback. Sorry about that. I've got a dog. My dog with me is going a little crazy, and he's in the same room. But I'm trying my best to keep him quiet, or at least calm. He's a young puppy, so he gets pretty energetic. Anyways, what I was saying was they never look like they're going to succeed. Right here, you think, oh well, it's just four consecutive bull bars, only one bear bar. We're going to get a measurement up. We're getting this. Well, you may not. For the bears, it's a two-legged pullback. So this is a second entry short of a potential double top bear flag if the bears see this is always in short. So that's pretty good follow through, and you have to think we'll probably start. I think we're going to test lower. I think this is strong enough down so that we're going lower. So yeah, I think we're going lower. Anyways, on the daily chart, tight channel, 50% pullback. We got a bear breakout. So anyways, 50% pullback. We're getting the bear breakout. Real potential that we get a measure move down and a test lower. I've been saying that we have an open measuring gap right here. Well, it's probably more right there. Find it on the 60-minute chart. Yeah. Measuring gap right here. You can see we reached it finally. So we're at a measure move target. But my issue is, oh, sorry, buddy. The issue I have is that tight channel down. So first up's probably minor, and we're going to go lower. So really with yesterday, as you can see, so here was the 20th. Here was the 20th. Sold off sharply to a new low. Reversed up. When you see this, this is probably strong enough for for at least a second leg up. So a lot of bears will exit. This is clearly always in long. You're probably going to get a second leg up. Well, there's your second leg up. Then we sold off strongly. This is a warning that it's a trading range, and we're probably not going much higher above this, but we could still easily go above it. Above it. And you can see we just barely went above it. And then we sold off. Strong enough breakout, clearly always in short. First up being minor, so if you're always in, you hold above, stop up here, and we just kept channeling down here. We're at a new low. Now, one of the biggest problems traders make is, especially traders they mix up major and minor reversals. When you see this, 3 consecutive bear bars, very tight channel, it's a breakout. It's a breakout on a different time frame. So you cannot look to buy. It doesn't matter. It's just, even if you say, gee, I'll buy and risk 40 pips, it's just not a good trade. It's not. It's too easy to get trapped, and it's not worth it. And most important, aside from the fact of you'll lose money trying to fade a strong move down, you're not going to make money when you could potentially have a big trend day. So when you see this, few legs up, it's a low too short, bears are going to sell. Their stop's up here. Strong enough, bear breakout, but then it quickly reversed up. Well, what are the odds this is a major reversal? The bar looks great, but it's probably not going to be major. And the reason for that is the risk. Think about this bar right here. You have big risk on a low probability trade. Low probability trade means exactly that, low probability. The risk is big, the probability is low. So you need a risk reward of at least twice your risk. This is basically 1 times your risk. So you got to ask yourself, if I buy above this bar, right here, put my stop down here, what are the odds I get a 1-to-1? Well, the reality is it's pretty low. It's not that high. So if you're taking that trade, you have to understand that you're probably going to lose money. And that's just the reality. Since you're probably going to lose money and your risk is big, think about the bear case. If I short this high or this close and put my stop up here and bet that price goes down to here, I've already probably had a 60% trade. And the reality is, price may not even come close to here, and it may just go straight down. So my actual risk may in fact be really, really small, and my reward be pretty big. So it's a bad trade. And that's most minor reversals. If you think about it, a minor reversal is a scalp. A scalp is a breakout or minor reversal. So is this a minor reversal? Sure. But most bulls are buying these lows, scalping out. And yeah, if that doesn't make sense, comment below, and I'll try to explain it in a different way. So anyways, still a tight channel, strong enough breakout for a little more down. We get a bull bar, we get another bull bar, or we're forming a wedge bottom. But tight channels are always forming wedge bottoms. They're always trying to reverse, and they most of the time always fail. When I say always, I just mean most of the time they fail. Doesn't mean literally always. So anyways, still going down, tight channel, no reason to be long. Bulls, they're trying to scalp, but ask yourself, how can you buy and make 10 pips? You really can't. The channel is very, very tight. And we just keep selling long. Here, is this a reversal? Well, it's the biggest pullback we've had. Every pullback's had 1 bar, 1 bar, 1 bar, 1 bar, 2 bars right here. Is that really going to be a reversal? No. It's a minor reversal. And guess what? Bears are going to eagerly sell. Every one of these is profit taking, profit taking, profit taking. Here, bears get to sell a few pips higher than they did over here, over here, over here. So the pullback's just a few pips greater. So why wouldn't they sell? Of course they're going to sell. And there you go. And we just keep going down and down and down. Here, we're at the moving average. Well, bears have not been able to sell at the moving average, which is a fair price, since over here. What are they going to do? Are they going to buy it or are they going to sell it? Of course they're going to sell it. The bulls are probably going to get trapped. Well, and there's the end of the day. So, in my mind, if this day, this would fail. So, what do we, what do I expect? A few things. Probably, I'll just draw like that. One of the things I expect is, by the way, with channels, I'm pretty flexible with channels. You know, I don't, I could draw it like this, I could draw it like that, I could connect lines like that. It doesn't matter. Many computers will see it many different ways. So don't get caught up trying to draw a perfect channel because you just need to understand a channel is a zone. What it simply means is if the channel is broad, when you make a new low, bulls buy. Make a new low, bulls start buying because they know the gaps are closing. So down here, so over here, we went below this low, and this low. What are bulls going to do? Well, they're going to buy. And smart bulls are probably going to buy 30 or 40 pips below this low, knowing that if they buy 40 pips down here, they've got a decent chance of making money or at least avoiding loss. Now, I would only recommend experienced traders doing that. So, what I expect is really I expect we're going to get probably some sort of 50% pullback or close to it, and we're probably going to close this gap. Now, why do I think that? Well, the reason I think that is because we have an obvious measuring gap right here that took us down to here. Okay? So now what are the odds that price gets another measuring gap that takes us all the way down to here? Well, it's possible, but it's just not likely. So, I just don't see it happening. And one of the reasons why is because very often, and this is part of the reason why channels work the way they do, traders think in equal distant moves. What I mean by that is you get a bear breakout. This is a bear breakout. If I sell anywhere down here, put my stop up here, the odds are price will go a measured move down before price stops me out. So it's 60% trade. Perfectly logical thing to do if you're willing to manage it correctly. Well, now down here, it's the same question. So let's ask yourself that same exact question. Now I'm going to drag this down for kind of a theoretical. So here's my point. Let's say a trader sells this breakout. They sell right here, right where this black dot is, and they put their stop up here. What are the odds that they make a measured move down? In other words, their risk is from here to this line, so the risk is 111 point basically 5 to 113.58. So what are the odds price goes a measured move down and gives them a 1-to-1 risk reward? Well, it's probably not as great as we think it is. In fact, I think it's, I think it's low probability. Now, so with that, and I think there are better examples, but let me just try and explain my reasoning here. Because of that, I think traders will take the opposite trade. And I can probably explain it better up here. And what that is when you get towards the bottom of a channel or late in a channel, traders will take a measured move and say, okay, if I buy here and bet that price gets up to here, I can risk here betting I'll make money. So let me restate that. I can buy here, put my stop down here, betting that price gets up to here. Now let me try and find a better example exactly of what I'm talking about. So here's an example. So what this means is that traders, oh yeah, sorry, I got kind of sidetracked. Last thing I'll say and then I'll move on. When you get this, The math becomes bad. It's some right here. If the bulls buy this bull bar right here, put their stop down here, the odds of them making a measure move up are really good. Well, if a bull buys this bar, puts their stop down here, the odds of them making a measure move up are really bad. Which means if a bear sells anywhere up here and says and puts their stop up here, based upon the logic of saying, okay, if I buy here, if a bull bought here, maybe they put their stop down here and go for a measure to move up. I'm going to do the opposite. So I'm going to sell right up here and say, okay, bull stop down here, 1-to-1's up here. I'll sell, put my stop up here, betting that price gets down to here, which is a 1-to-1 risk reward for the bears. And in my mind, that makes sense. And the reason it makes sense is because the math is actually very strong for the bears. And that's really why, if I go back to this chart, that is why, that's kind of the logic with these bars right here. The risk is big, the probability is low. Hope that makes sense. And then with the euro dollar, very strong breakout. I don't care why it's going up, what news costs, it doesn't matter. The only thing I can do is buy. And as scary as it looks, if you're willing to buy, and just hold, buy this bar, buy this bar, buy this bar, you're going to get a measurement. And look, even if you bought the high ticket today, you still could have made money. So you could have bought this close, but your stop's really far away. And that is the price you pay for really high probability. High probability almost always equals high risk and low reward. Doesn't make it a bad strategy though. And then really, in the grand scheme of things for the euro, so here's a 60-minute chart. Let me go to a daily chart. Daily chart, really we've just been channeling up. And so I don't really remember what I've said about the euro. But one of the problems with this is a small pullback trend. And even though the pullbacks are lasting a lot of bars, and it's similar to a broad channel, right here is kind of this is a good example of a broad channel. But broad channels typically stay in a trading range longer than they trend. So sell off, trading range, sell off, trading range for mini bars, sell off, trading range for mini bars, sell off. But they go really, really low, and there's still strong trends. With the euro, one big difference is this right here. So bull breakout, we have a gap. Another breakout up here, a gap. Another breakout up here, gaps. When you see this, there needs to be red flags going in your mind that something is not right. The bears are getting trapped every time they sell a new high. They sell a new high, get trapped, forced out. They sell it up here, get trapped, forced out. So what does that tell me? Well, that tells me this. Something is different about this rally within this trading range. So you can look at this and say, gee, it's parabolic. You know, it's, one second. I had someone ask me about my thoughts on the euro dollar. So I wanted to really answer them right now. And actually, going forward. Anyways, I tend to think what I'm going to start doing is splitting these videos up. So making a video over the dollar yen, making a video over the euro, and then making a video over the E-mini and crude oil. So that'll just be easier. And so anyways, on a smaller note, and then I'll make a video over the euro later on. You're getting a lot of gaps. This is a breakout. Look at the monthly chart. Do you want to sell this? No way. I've been saying for a long time that I think we're going to close this gap. It's a trending trading range. So trading range, bear breakout, trading range. Guess what? We're going to close this gap. I'm very, very, very confident that we're going to close this gap. And I'm very confident that a trader who buys and bets that price that will get up to here, I'm pretty confident we will make a measure move up. Now, here's the issue with that. Do you want to risk this many pips? That's a lot of pips, and it could take a while. But the euro is very, very strong right now, and we're going higher. And this is a good example on the daily chart. You see these moves; they don't look strong. You say, "Oh, exhaustion. Okay, I need to sell." No, you don't need to sell. It's a very tight channel. Here, oh, well, failed breakout of these tops. It's a second entry short. Yes, it is a second entry short. But why would you sell when the channel's is tight? The bears are not making money. Here, bears aren't making money. Bears aren't making money. They are minor reversals. And when you see this, and when you see this, just know it looks like this. So these breakouts are made up of really of broad channels on smaller time frames. But you quickly realize that those broad channels are so tight that you can't make money trading against the broad channels. Well, you can on a monthly chart. I mean, don't take that too literal. You know, of course, you can make money on a monthly chart buying on Sundays. But I'm just saying, in general, you have to be really careful. So, just to clarify, I'm not saying. I mean, clearly these days are pretty big, so you could sell, scalp out. But I'm saying if I'm trading, weekly charts, trying to make money, it's not good to short. My risk would be really big since it's a weekly chart, and my reward compared to the weekly chart would be really small. Last thing I'll talk about real quick is I'll talk about the E-mini just real quick. So the E-mini trading range days, and then a few decent small pullback trends last week. Strong enough breakout, clearly always in long, very high probability we've seen the low of the day. And when you get these breakouts and these rallies, the odds are high that that's the high of the day. So what that means is any pullback will be bought. Traders will buy these pullbacks, letting the price rallies back up. So full breakout, traders will buy down here, betting that these rallies will. They're really just betting that worst case it's a trading range. Small pullback trend, pullbacks are small. You can't be selling. Just do the math. Look at how hot. Look at how big these pullbacks are. How big these pullbacks are. How big these pullbacks are. They're not that big. So bear bar, traders will sell. You put your stop up here. Really no reason to get out. If you're taking this short, I wouldn't get out of it here. It's a 50% pullback. The math's better to sell. Put your stop up here. Then you get this. So you have to be careful when you get a bear bar, sell climax, another sell climax, and then a big bull bar. It's parabolic. It looks like a trading range. This rally was so strong that bulls will probably buy a deep pullback. And then when you get this, big down, big up, probably in a trading range. So even if you sell off, probably buyers somewhere down here in more trading range price action. Here, really limited order market. Bears will sell, bulls will buy, but probably not going much of anywhere. And you can pretty much buy or sell and make money. However, three or four bars up, probably always in long, better to buy. Crude oil, then I'm gonna have to take a break. I'm just getting tired of talking. So 3 pushes up. This is a 60-minute chart. Just gonna give you an overview. I personally really like crude oil. Uh, I just like that it just moves a lot. 3 pushes up. 1, 2, 3. 1, 2, 3. Really, we tried to top out. Rallied again, trying to top out. So it's a broad channel. Broad channels, expect bear breakouts or bear flags. Sorry for the dog that's in the background with noise. Here, when you see this, many bars down, probably going to get a measure move down, which we clearly did. It's okay to wait and sell here. You know, if you think about it, here's a broad channel, and this is where we sold off this channel. Well, do you want to buy after this many bars down? No. You've got to be thinking potential double top somewhere. We may get a measure move down. Well, here, you're getting a measure move down. And you can see what happened. There's bought this low, got trapped up here. So when you see this bar go up, turn down, it's a sell. So, and traders are selling, they're selling for any reason. And we got the measure move down. So when you look at a daily chart, it makes sense. Strong rally, 50% pullback, first reversal down will fail, which it did. So you can buy, even if you buy it up here, it's sort of a major reversal in the grand scheme of things. So since it's major, first reversal down will fail, and we'll probably test up, which we did. So you can buy here, scale in, scalp out. But then when you get this bar, guess what? Bulls are going to scalp out. We're probably going to sell. I hope these make sense. I hope these videos are helping. Comment below if you have any suggestions or anything you'd like me to discuss. Thanks.